Anangwe. And I want to say thank you for making time for this important session on unlocking payment innovations in Africa, which is going to be running for the next 29 or 28 minutes to say. Let me introduce the panelists. I have Mr. Busi Radebe, Head of Payments, Standard Bank, South Africa. And if you're here, you can just wave so that we can be able to know. Yes, there you are. Thank you so much, Mr. Radebe. We also have Ms. Oyedola Yemi, who's the Head of Digital Payment, Settlement and Operations at Opera Pay Nigeria. Just wave so that we can be able. Thank you so much. And then we have Mr. Geva, who's the founder and co-CEO of iiDENTIFii South Africa. You can just wave so that we can see you. Thank you very much. I still insist, like I said in one of the panels that ended yesterday, we need to have more gender representation in these panels so that we can be able to. Otherwise, we make it look like, tech and banking is not a women's thing. And I want to disagree completely, right?
I align with you perfectly, Eugene.
Asante sana. So let's take it off by just starting off this particular conversation with, before even talking about the future of payment systems and structures in Africa, it would be important to first pack that conversation a bit and talk about the current trends that we've been seeing when it comes to payment systems across our continent, and where I've been raised. My mother raised me well, and she insisted that women should always go first whenever you're, having any discussions where women are involved. So I'll start with you, Oyedola, if you may. What is your kind of take on the current trends before we even look at the future that we'll be talking about in the next couple of minutes?
Hey, thanks. Good morning, everyone. And thanks for having me. I mean, such a pleasure to be here. In recent times, we've seen the rise of fintechs, paytechs, regtechs, insurtechs, healthtechs, just trying to unbundle the various banking functions. And in recent times, in Africa, and even beyond just that, we've seen how payments has evolved from trade by barter, to the check system, to the tally number, to electronic funds, right? And even more recently to instant real-time transfers. And interesting there to, that we've seen observed is that even in Africa, here in Nigeria, we've been ranked number 6, right, in the world as one of, in terms of volume that has driven real-time instant payments, right, in Africa. So I mean, as long as cash is king, I mean, these payments would always evolve. And also in terms of innovation, like, from our company, we've moved from offline acquiring models to online acquiring models. Now even going to issuing of debit cards, just trying to meet the needs of the target audience. Even in terms also of regulation, we've seen how regulation has made the terrain sane. Without regulation, is going to be, very haphazard. So they've been able to make the terrain. Sometimes, they may stifle our operations, but other times, right, they allow for, growth of payments, of payment processes. So I mean, it's been pretty interesting, and I think we've been forward moving on this moving train.
Perfect. Mr. Radebe, I mean, if you were to move the arm of the clock backwards and take a look at the evolution of payments from where you sit at the Standard Bank in South Africa, I mean, briefly, what would you be reporting back as far as the trends are concerned, from the side of the consumers to the side of the service providers?
Thank you very much for the question, and thanks for having me as part of this panel. I think from a South African point of view, one of the key exciting things that we are focusing on now is the actual modernization of our payments infrastructure. So we've got an infrastructure that served us for decades, but we are starting to ask ourselves that does this infrastructure respond to the current and the actual future needs of the customers that we serve as financial institutions? So there's a big focus in in the modernization of the payment infrastructure. And some of the key things that we are looking at enabling. I mean, Oye has spoken about this concept of immediate payments. Mm-hmm. So it's one of the key features that we are focusing on. But we are taking it a step further to say that in South Africa, we've always been mostly an account-based ecosystem, if I may call it that. Most people have bank accounts in mm-hmm. our world. But what we're starting to see is that for certain segments of society, mobile wallets are starting to become much more prevalent. And if you are looking at the country in totality to say that you want to drive financial inclusion, you want to drive competitiveness in the payments landscape, things like interoperability across these different types of value stores is quite critical. Mm. So the modernization journey that we are focusing on now, those are some of the key things that we are looking into modernizing and standardizing, most importantly, with the latest ISO standards, but also introducing interoperability across the different value stores, including bank accounts and wallet systems. Thank you.
Right. Geva, for you, I mean, we're hearing the sounds or the voices of the significance of modernizing, but still significantly standardizing. And when we're talking about payments, we are talking about borderless transactions. Someone is away from a particular country or a geographical location, but they're still able to make these particular payments from wherever they are. What would you be reporting back when it comes to the current trends, just as the two panelists have already mentioned, where you sit? I mean, what are the trends before we get into the meat of the conversation today?
Eugene, thank you for having us, and thank you to my esteemed panel colleagues. I think that what we see as a biometric authentication business is we see certain trends from money remittance through to QR code payments, through to core banking systems, enabling remote payments, mobile payments. And we see, and because we are honored with so many clients, Standard Bank is one of our clients, Absa Bank is a client, Investec is a client, SnapScan is a client. We're starting to, and money remittance clients, we start to see that at the base of all of that is identity, digital identity. So these institutions, whether they are large established incumbents or they are small disruptive fintechs, need to know who's paying who. And as Busi spoke of, mobile wallets, right? So they need to form as a benchmark, what is the digital identity of the individual or the merchant that is transacting? And on top of that, how do we, to Busi's point, create interoperability? How do we ensure that the ecosystem works? There's been, I think due to COVID, I mean, this panel would have been held in person. We now are engaging on Zoom, which means that everybody is expected to be exactly on time. And that happens throughout the day on all meetings. And I think in the payment world, people are expecting immediacy of payments. They want to be able to pay now in a multimodal form. They want the payments to reflect immediately. They want the goods shipped immediately. This whole pandemic has totally shifted our mindset of what is an acceptable speed. And we're starting to see fintechs saying, listen, I'm not only interested in a point of sale, I'm now interested in point of sale with NFC, with a wallet, with a website, with a QR code. And the banks are looking left and right and having to launch major projects to enable these disruptions upon themselves. It's a very, very interesting time. And to Busi's point, what's very interesting is that the cost of acquisition of a client for a credit card is very, very different to the cost of acquisition of a client for a mobile wallet. So we're seeing a lot of banks and fintechs starting to acquire wallets at a very low, a low cost of acquisition, and then feed credit and debit and vehicle asset finance through that channel. So it's a very, very interesting time for payments.
Right. And even as we speak about unlocking these payment innovations, we cannot be blind to the challenge of fraud. And, in 2020 alone, 1.1 billion fraud attacks were detected since the beginning of that year alone. And of course, with more digital payment platforms, there is exposure to even, more fraud, related kind of cases. But even as we speak about this, how much of, a challenge is fraud going to be, or is a thorn in the flesh of your operations, or the operations of those who will be wanting to come up with these digital payments? Yemi, if you may.
Okay, thank you. So, fraud knows no boundaries, right? As you keep innovating new products, right, the bad guys are also not sleeping. They're trying to exploit the vulnerabilities of the system, or they're trying to take advantage of those who are financially illiterate, or sometimes the greedy people, right? And the way they've been able to express their tactics is probably either through stolen identities, using other cards, digital hacking into wallets, using their various card informations to transact online. And we are not out of this mix, because it happens on the system. But I think that you cannot totally eradicate fraud, but you can bring it to the barest minimum, right? And then we can achieve that, either through your first level due diligence of KYC, knowing your customer to the tiniest detail, plugging in, into identification systems, right? And I think one thing that can really help, the fraud case right in our terrain is having like a database, that stores up, the names of, blacklisted customers, blacklisted IPs, and blacklisted, phone numbers, such that once any fintech or paytech plugs into that system, they can already say, hey guys, watch out, that's a fraud guy. Don't let those transactions be consummated, right? So we can't totally eradicate it, but we can reduce the barest minimum.
Right.
Thank you.
Right. Thank you. Busi, what do you think we should be doing, or how do we deal with this thorn in the flesh of our operations, that is fraud?
Look, if you spoke to any chief executive of a bank, and you actually ask them what's the top 3 priorities, in their world, I would be surprised if they don't include cybercrime as one of those top priorities, given the risk that it poses in the payments ecosystem. But to Oya's point, there'll always be a balance, that the level of risk appetite versus the trade-off of customer experience. You will always have to strike that balance. And one of the key things that you deal is this concept of we are all now using self-service digital channels, right? Now, how do I ensure 100% that the person that's originating a payment instruction from the app that I have as a bank is actually Oye and not somebody else who pretends to be Oye?
Correct.
Now, you're starting to see, very common today when I log on to my bank app. Years ago, I used to have to punch in a PIN of some sort. But with the evolution of mobile technologies, where biometrics is pretty much, even low-end smartphones, they do have a level of biometrics built into them. So you are starting to leverage those benefits that come with the evolution of technologies to ensure identity of the person that is actually sending us the payment instructions. And we spoke about immediate payments. Right? Now, if you talk about immediate payments, you cannot finish that sentence without talking about the increase in the risk of fraud. Right. So where do you draw the line that immediate payment is going to become more of a norm rather than an exception that it is today? But unless you've got the necessary fraud and risk mitigation capabilities, then you're going to lose the battle. And it's not a battle that you win as an individual institution. Oye rightly touched on it, that I can have my own risk mitigations internally within a bank, but you're looking at an overall ecosystem. There could be mule accounts in bank B, So if you don't have that central infrastructure that does the necessary monitoring and identification of anomalies, you can easily build a fort around yourself, but then the exposure comes from somewhere else. So there'll always be that trade-off. There'll always be that trade-off. And last example I'll give you, I mean, during COVID, people became much more interested in contactless payments. So you just tap your card, and then you don't have to worry about punching your PIN on a POS device. But guess what? You have to put limits on the value that that you are transacting. And the reason for that is because you are worried about the risk of fraud. So as we build all these capabilities to mitigate that risk, the customer experience will only improve.
Yeah,
thank you.
Great. Geva, when we're still talking or still on this breadth of fraud, yesterday on one of the panel sessions, we had from a panelist who mentioned the issue of culture being one of the bottlenecks, to the changing times and evolution in some of these technological advancements and innovation that banks are actually adapting to. So we are seeing people who are worried about, transacting through technological, means, just because of that cultural fear that this is a space where I might lose the little that I have. Little here being relative, depending on what little means to each of them. So how do we ensure that we have made clients comfortable, from a perspective of you will be able to transact, and do your payments safely, but also the banking institutions or those who are dealing with the service provision, when you go to tell them that you are offering this particular biometric solution, that you'll be actually speaking to their heart based on the challenges they've faced when it comes to fraud. Geva.
It's a very, very, very astute question. I think that culture it's about empathy and about communication. Customer empathy for every entity. When we serve Standard Bank or Absa or Investec, we don't think of Standard Bank as our client. We think of Standard Bank's end customer as our customer, right? Because unless we're able as iiDENTIFii to create an authentication process that is easy, seamless, and scalable across all devices, all languages, all suspicions, all comfort levels, then Standard Bank's not going to be happy. So and that's about empathy. What language does this, and understanding, what language is spoken? What is the disposable income of this individual? What are the aversions to biometrics? And that's a dialogue. It's not something that's resolved via a cold survey monkey. It's a conversation. It's a focus group. It's, the reason I don't want to give you my face image is because I have got a fear that the face recognition engines that are being used in the States are being used to, with ill intent and are putting people in prison because of lack of accuracy. Are you now going to deny me credit on my car or my business because you can't accurately, decipher my face using face authentication? Now that's a dialogue. It's not, please answer this 10 question survey. And what we've seen been very impressed by the big banks here in South Africa is that they enter into that dialogue. They really do. We do a lot of work with SBS, Standard Bank South Africa, and we're entering into other African territories now. They enter into a dialogue. Are you comfortable with a selfie? And it's funny, the selfie is something that kind of translates internationally, right? I think Barack Obama made it very famous in North America, and then it kind of went across, but it still needs to be, you need to make it available on a $40 Android phone. So I think it's about empathy, communication, real understanding. Also in the authentication methods, you can't have to explain things in words. It must be a visual representation. Any person of any culture, any language, and education level must be able, and as I say education level, I mean relatively young individuals must look at it and know how to relate. And that's why the methodology is, put your face in the oval, hold still. Once you ask individuals to wink or blink or tilt their heads, there's a mirror image. So it's that. And I think just going back to, it's not to the question you've asked, but Oya and Busi spoke about this, and I'm delighted to hear about it from both of them, is collaboration between the institutions on fraud. Busi said it, you don't want to live in a neighborhood where you have the highest wall, but everybody else in the neighborhood is getting robbed, because the value of your property will just go down. What you want is a WhatsApp group with your neighbors where you're like, hey, did anybody hear that? Yeah, I did. Don't worry. Sorry, it's my cat. She knocked over the, okay. Did you hear that? Yeah, no, that's a problem. Now, if you look at, there's a TED talk by Caleb Barlow of IBM talking about cybercrime, and it was to Oya's point. These cyber criminals are organized. They are super well remunerated. They work from 7 a.m. to 7 p.m. They have weekends with their families, and they are day in and day out trying to wash money through our African financial institutions. We need to unite. We need to collaborate. Yeah. What technology works? What face engines work? What databases can we share? What are your learnings? If we don't unite, it's going to really decrease our probability of success.
Right, unity of purpose, you call it, and I believe that it's a word that is resonating across most of the panels that we are having. Yemi, for you, I mean, what do you think, or how has it been easy or hard for you to tackle the issue of culture change when you're introducing new payment modalities or methods? Because earlier we were talking about Facebook and other digital platforms, which in the past we've had a section of religious people saying that you should not use it because it is from the devil and it is a devil's product. But today, because of COVID-19 and churches being closed, it is where they're actually preaching from to reach many audiences. So culture change and embracing new technology, how easy or how difficult is it for you from where you sit?
So really it's a tough battle, right? Because in the climes that we are in, we can categorize the various users into early adopters, late adopters, and never adopters. And we would say that we've seen a high level of early adopters in this generation, the millennial generation, the Generation Z that is to come. So I think we will just continue to do more financial literacy, right? The main issue here is trust. Just as what one of the panelists said, the main issue here is trust. Sometimes they don't really understand the back end of this product. Oh, will my money go away? What if my money goes off? What's going to happen? So we need to be able to continually educate them on, oh, this is not some sort of funny product. This would enable you achieve X, Y, Z. So we would continue to educate the target audience right until we achieve, the financial inclusion goal that we all desire.
Right. But see, in your thoughts as well, I mean, we're looking at COVID-19 and the question has always been, has it been a blessing in disguise for your operations, or has it been, a hindrance to your operations? Because we have seen that people have actually won or lost in different measures when it comes to how they have changed their, operations due to COVID-19. You might want to respond about the issue of the culture change versus its impact on embracing of technological payments. But what is your take on COVID-19, and what should financial institutions, tech companies be doing today to be able to turn the tides around for them when it comes to the impacts of this disease?
Thanks for the question. I think I'm sure we can all align to say that the COVID crisis has been a bit of both, right? But I would like to focus more on the positives that we're picking up out of this crisis. That late last year there was actually a cartoon that I saw which was put to the chief executive to say, what would you attribute your digital transformation to, your CIO or to COVID, right? And the key thing that we can always take away from this crisis is that it has accelerated digital adoption to a scale that things that we thought we would worry about 3 years down the road or 4 years down the road, we've had to worry about them today, right? And people, because we are in a state of crisis, that barrier or resistance to adoption is also reduced, right? Because it's a question of survival, that you want to do something because you need to survive, right? If you cannot go and buy food for yourself, you actually have to use a digital platform to order food, right? Because there's a lockdown in a country. Only certain people are allowed to be driving around, right? So you've seen people that had never done online shopping to buy groceries online. People have never done
now
it
embracing it.
Right? But now they're embracing it. They don't have a choice, right? So and those are the positives that I think we can attribute to this crisis, that it has accelerated the digitization of financial services.
Right. In less than 20 seconds, Geva, maybe we can now take the closing remarks. Where do we go from here so that we can close this particular conversation right away?
I think that digital innovation has been accelerated. That is the upside of the pandemic. I think that the fourth industrial revolution is going to need a lot of computer engineers to protect the payment infrastructure. And we as Africa should be investing heavily in the education of computer engineers to start exporting technology.
Perfect. Yemi, you had the honors of opening up, and you have the honors of closing as well. Yemi.
Okay, thanks for this. I mean, I would just say that, as we scale in Africa, right, we need to realize that we can't scale with the same operations that happens in the Western world, right? We need to drill down and develop products that suit our terrain. I mean, cash is king in Africa. And I mean, it makes up, 1.5% of the GDP of economies. We are producing cash, we are printing cash, we are storing cash, we are transporting cash. I mean, and there is a huge market there. So, I mean, we all need to just step up to the assignment, fintechs, paytechs, banks, collaborate together, right? So that we can create cost-effective solutions to democratize payments. And we would say that everyone long end would be, be included in the financial service space. Thank you.
All right. Thank you very much. Thank you very much, Yemi. Thank you so much, Geva, and of course, Busi. Thank you for making time for this particular conversation.
Thank you, guys.
I want to end it.
Thank you.
All right. Bye-bye.
Yeah, bye.